The Federal Reserve says its actions on Wednesday show it is now serious about fighting inflation. Trouble is, it won't use the best weapon possible, gold. I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. To no one's surprise, the Federal Reserve raised its benchmark interest rate by 0.5%. It also said it would start selling bonds from its bloated portfolio to remove some of the excessive, unnecessary money it was creating until recently, money that helped fuel the inflation afflicting us today. But our central bank wouldn't even consider unleashing the most formidable, reliable, time-tested tool to keep the dollar stable in value, a gold standard. With few interruptions, the U.S. was on a gold standard from the 1790s until the early 1970s. During that period, we experienced the greatest economic growth of any nation in history. The post-World War II Bretton Woods International Monetary System fixed the dollar's value to gold at $35 an ounce. If the greenback started to rise above that level, thereby indicating too many dollars were being created which would set off inflation, Washington was expected to take immediate remedial measures. The system worked. From the late 1940s to the end of the 1960s, the U.S.'s average annual growth rate was 4.2%. Then, for fallacious economic and political reasons, the U.S. blew up this gold standard in the early 1970s. The average growth rate since then has averaged 2.7%. That doesn't sound like much, but that lower growth, compounded over 50 years, has been devastating. If we had maintained our historic rate of expansion, America's median household income, now about $67,000, would be $100,000 to $110,000. Ponder that. Imagine having an extra $40,000 of income. An economy works best when the currency is stable in value. It stands to reason. Investing long-term is risky, but you get less of this productive activity when the dollars you get paid back will likely have lost value. Your real gain, if there is one, is much smaller. In the late 1980s and much of the 1990s, Federal Reserve Chair Alan Greenspan said he tried to keep the dollar loosely tied to gold, which was critical for the so-called Great Moderation, a period of stable money and economic vitality. Why gold? For a variety of reasons that has kept its intrinsic value better than anything else in this world for 4,000 years. It is similar to a yardstick. When you see the price fluctuate, it is the dollar that is changing value, not the yellow metals. Unfortunately, the whole subject of gold is now taboo among policymakers and almost all economists. One cannot even bring the subject up. It's the economic version of cancel culture. Too bad. A gold standard is not perfect, but long experience has shown it is better than anything else. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions. I look forward to being with you soon again.